What's happening, guys? I hope everybody had a fantastic weekend. We've got the last Sunday video of July, although the next video will be the last day of July. It'll be for August. But it's a good reminder that we are more than halfway through the year. And so it's a good time to look back and make sure that you're checking off those boxes that you set out to, accomplish this year in 2022. Whether it was, minimizing particular setups, things that typically would give you a headache, a drawdown. For me, trading those outlier, low float type moves, I rarely trade them. If I do, it's smaller size. I just don't bother trying to figure these things out anymore when I could use a vehicle such as AMC and Mara and Riot and all these other ones that have, rather insane liquidity to really scale in and scale out of a trade. There's no reason to put myself in harm's way to be able to be swiped by, whether it's a newsletter, whether it's just a market maker, some sort of trap that, ends up in a circuit hall. All these different things are market risk that, you can actually not necessarily avoid, but minimize by the choices that you make. So for me, that was one of the big changes that I've made. And as you guys know, each year I try to get off desk more, especially in the summer, just to make sure that, I'm trading to live, not living to trade. And I think that that's a big issue that a lot of us traders have is, there's always something more, always something more coming. There's always another setup. And you always feel like you can't get away. But at the end of the day, it's the best job in the world if you let it be the best job in the world. But for a lot of us, it's very difficult to do that. So anyway, crazy hot weekend this weekend in New England and last week. It's been like 90, 95, 98. But first and foremost, I wanted to talk about Traders for a Cause. Traders for a Cause, last week I said we sold out in 24 hours last year. This year we pretty much sold out in like 24 minutes, which is amazing. It's a huge demand event, and we don't just sell unlimited tickets. So the reason for that is we want it to be a condensed, close-knit kind of community, real networking. You meet people that you're going to be able to, utilize in the years to come in your career. And I think it really makes a big difference having it to a rather limited capacity. That said, although we sold out of all the early bird tickets, we do have sponsorships available. So if you're interested, email me, webmaster@investorsunderground.com, especially if you have a scan type service or a trading platform or whatever it may be. Email me. We're always looking for more sponsors. But as we figure out what sponsors are taking what tickets, for example, if they bought a package that includes 10 tickets and they only need 4, then we're going to be able to sell 6 more. So if you did not get a ticket, and obviously you can see that they're sold out and they've been sold out for a week, email me, webmaster@investorsunderground.com, and I will send it over to Zach. And as tickets become available, it'll be first come, first serve, and Zach will reach out and let you know that there's one available if there is. This year is going to be a little bit different. We're doing a poker tournament to start, which is going to be interesting. I know there's a lot of poker players. There's also some that don't, and it doesn't matter. You don't have to play, but it's included in the ticket price, and that's during the first cocktail hour, so you can kind of bounce around and meet other traders. One of the things I want to talk about was a midweek modification that I made. I started to get that overwhelming kind of feel because there was just so many setups every single day. Another one setting up, and we had TH and Goss and Sega and Varu and RYTM and AMC and Mara and Riot. And, I want to trade them all. And so then you start to trade them all, and you obviously nail some, and then you're on the right side of the other ones, and you're like, all right, everything's going great. And then all of a sudden they start to kind of turn. And while you're focused on a couple others, these ones are going back to either flat or turning into a red trade. And it was just, it's stuff that you can avoid and trying to do too much. And you don't need to do everything. You just need to focus on those A-plus type setups. So Wednesday, Thursday, Friday, that was my sole focus. Is just, forget about everything that's set up. just pick the best. And I always, as you guys know, I always try to pick the top 2 every single morning. Every single broadcast, I always bring it down to my top 2 watches. Sometimes there's a couple secondary watches, but it's always just 2. That's it. Scan might have a bunch, but 2. 2 is what I focus on. And so this week, I had just focused on AMC and Mara. And then with Mara, sometimes I like to spread risk, as you guys know, across, like a basket, right? So Mara, you can also trade Riot, R-I-O-T. And so, usually those are kind of, I consider those like one trade, basically, because I'm utilizing the sector to kind of spread risk across multiple names. But that said, it worked. It worked a lot better than trying to figure out, 8 to 10 names at a time and things like that. So hopefully you guys were able to capture a good week. There's been a lot of action. We talked about how thin it was last week, and to be aware of that. You saw how thin it was this week, right? And we had that squeeze out on Thursday before it started to come in on Friday. That's the thing, is when these things bounce, when the market, looks like it's about to sell off, and then it rebounds real fast, and then it goes again and goes again and goes again, everybody starts to freak out, just like they freak out on the downturn. And so they start to make emotional decisions, which starts to fuel things higher and higher and higher before the exchange comes in, it fails, and the squeeze is done and we unwind. So stay out of trying to figure it out. Stay out of trying to figure out the top. It's the easiest thing to do, or the easiest answer, but it's the hardest thing to do, rather. We always want to be part of it. We always want to nail it. We always want to, just not miss the trade. But sometimes missing this leads you to a better entry, which, you don't have to get the top. Even if you let it come down, sometimes you'll actually have a way better average than you would have had by trying to find the top, because it went another $2 and now it came back $1. You're starting in after things have exhausted out, but it's $1 better than when you would have, started in the first place. So think about all these things when the market's like this. Half of me loves, the unwind days, but the other half of me, I want things to keep on going higher, because things keep on setting up. People are making more money. People are comfortable holding names. There's a lot more long opportunities. There's a lot more short opportunities. But when we come in, and we come in hard, sometimes, buyers go on strike for a little bit, and, it gets slow for a couple days. So I just want volatility. Lance interview. Lance interview, for you guys that have not seen it, there is part 1 and part 2 we've added to the YouTube channel. I hope you guys checked it out. If you didn't, you have to. It is a great interview. Lance is a lot like me as a trader. We trade a lot of the same kind of situational, parabolic type moves, or, basically capitulation trades, either direction. And, we talk about the V-shaped, kind of the right side of the V. He dives into that. And I think that there's a lot of knowledge there where you can just look at it or listen to it, and you're going to say, yeah, I do that. And okay, now that you like verbally say, okay, I do that, and this is how to rectify it, you can start to make changes. And that's why for me, every morning when I do the broadcast, it's helping me too. It's not just, about providing a service to members and just saying whatever in the morning. To me, it forces me to zone in and focus on those 2 names and really, talk about what I'm looking to do. Because a lot of times when you don't kind of talk it through and have a game plan, you're just kind of figuring it out on the fly. And that's not where you get those big trades from. The big trades come from conviction. You get conviction from preparation and understanding why is this a really good opportunity. Not just by saying, okay, what's up today? Oh, this one, I'll trade that one because it's up. Maybe I can make a few bucks. If you want the outlier gains, if you want the outlier opportunities and really up your game, it's about coming to the market prepared. And you'll notice every single Sunday, and it's pretty much every single day on Scan, but it's always the same sort of setups. And I'm just rotating from either one sector to the next or one move to the next. I usually trade things around maybe 2 or 3 days and then move on. The more you go back to the well, at some point it's going to catch up because you get this false sense of confidence that, you know, you've traded it so well the last couple days and you want to keep on milking it for all it's worth. Well, you know what? You traded the setup that came into your wheelhouse. And that's why the trade was good. It doesn't matter what the stock is. It doesn't matter what read you had on it. You traded the setup that fits your personality. And then you moved on. And you wait till it either sets up again or, you know, you go on to the next name. And I think that's an issue that a lot of people have where they get this false sense that they know what they're doing on this particular trade. But really it comes down, it was the setup. And you're trading that setup. And don't overstay. Don't keep going back. Trying to do the same thing over and over, otherwise it's gonna catch up. Last couple notes before we get into a couple questions from the YouTube channel, and I will pick a winner right before the scan because I forgot to, so I'll do it on the second batch. But HKD is a good thing to kind of see for those short sellers, mainly like the top TOP and BLTE type traders where they just short to short because it's up 400% from IPO price and they think that it has to pull back. Then they get stubborn and it squeezes out. You know, we already went over this in the last couple of videos. But HKD is when, you know, shorts get too comfortable. They get, you know, basically worked into this position, you know, convinced that they're right. But yet overall, you know, each time, if you look at HKD, it's slam down, consolidated, slam down, consolidated higher, slam down, consolidated higher. People get conviction with that slam down because they want to catch the next liquidation trade. But they're not all going to do it. And you have to understand what to look for. We've gone over it every single Sunday video. But stay away from just shorting everything just because it doesn't make sense. Things can make no sense longer than you can, what's the word? What's the, stuff can stay crazy basically longer than you can stay solvent. I don't remember the exact quote, but basically it doesn't matter what you think. When these things are going, they can go and they can go further than you think, and you need to be careful. A couple other notes. HTGM, great example, and APRN, great example. We talk a lot about, you know, the kind of the process and, you know, one kind of chat room into another chat room, and then they kind of promote this Fintel short interest as like the thesis. Meanwhile, it's all just one big, you know, pump. And as you saw, HTGM came in 50%. APRN has now faded, you know, 50%. And it's just the same thing over and over again. It's just being patient because, you know, they're bringing in a lot of retail traders, you know, talking about breakouts at $2, talking about how, you know, APRN is going to go to $20 and all this kind of crazy stuff. And then the Fintel stuff ends up marking the top, and then nobody talks about it, right? So just be cautious of that. But it's the same thing we've seen SKYH, BFRI, and then we just saw that on this recent one. Even ATR was another one. But it's the same process, and it just goes from one ticker to the next. So when I warn on those, you know, it's not necessarily just short. No, because you can definitely get squeezed if things start to hang around. But you wait for things to, you know, get faster. For example, HTGM had that first move, 130 to 90s, which was a fantastic fade. And then as it starts to grind, you want to wait for it to speed up. And it got towards that 2. And the goal that I had been posting in Scan was a 2 to 220 kind of parabolic breakout, and then look for the fail. So that's exactly what I did there. You know, faded that some. Unfortunately, not enough size. YSG is a lot better. Same kind of situation. But, you know, just be aware of those kind of situations. Other than that, using levels. I talk about using levels a lot, and, you know, it's a visual reminder to tell you either don't scale, or if you did scale, if you did use size, you know, cover. Be proactive about your covers. And so I got a message about Tesla this morning or yesterday morning. And, you know, somebody had gone back. I told the room basically go back and watch the commentary through it because, you know, I started in and I started in, I think it was 805, like 50s or so, something like that. And, you know, it stayed strong. So my goal at that point was to kind of see an 815 to 820, you know, parabolic, and then potentially come back. But I had no interest in scaling in to the trade unless 810 peaked. And if you go back and you drew that line, you can see that each time, 5, 6, 7, 8 times, it tested the 510s and it held. And that is all very easy to see when you draw that line. And there was a lot of people in the room that, you know, they're trying to anticipate it. And that's what I used to do 3, 4, 5 years ago. You get in and you're wrong on your starter, and then it starts to kind of come in. You start to get conviction that it's going to break. So you anticipate it breaking. Meanwhile, it holds. So it bounces up, and you're like, oh boy, maybe I shouldn't have done that. But then it lets you out again. It comes back down. You get even more confident that it's going to crack that time. So you add. And you end up 2, 3, 4x size, 4x of a starter, and, you know, more than you wanted. And then you get emotionally squeezed out because you didn't have enough room to let this thing work. So it's a visual reminder. Draw those lines and wait for them to cross and fail. TBLT, same thing. If you go back through the chat logs on Friday, the 8:50 a.m., we talked about 4 lines. And by 10 or 11 a.m., it hit those almost to the penny on each one. And it doesn't matter, you know, how your trade was. It doesn't matter right or wrong. But what matters is if they're not breaking and they confirm, they hold trend. You saw me note, hey, you know, this thing held that base, and that's your key level. And then another time later on, there was a nice parabolic move. And then you got to assume that, you know, X level holds. And if it does, then you should be proactively covering. If not, at that point, you can start to be patient. If it reclaims, then you got to be super cautious. So again, it's a visual representation showing you, you know, where to be patient, where to size, where not to size, where to cover. And I highly suggest it. It's been a game changer for me because it's right there in your face, reminding you, why are you adding? Why are you scaling? Why are you fighting this thing? And you just have to wait for it to crack that line. And when it cracks, if it comes right back through it, that's not a confirmation. It's about failed follow through momentum under that line. So remember that, be aware of that. It would help on TBLT. It helped on Tesla. It helped on all these different names this week. And it's going to make your life a lot easier, including Mara. You know, we had a couple different key spots. And it's, like I said, it's been a game changer to the style in which I trade and my success. All right, let's get into the questions from YouTube. Like I said last week, if you know, normally I want to like and your key takeaway. So fire down your key takeaway. But also, if you leave a key takeaway, feel free to ask a question. And I will try to get to some of them each week. I did that a while ago. It just depends on, you know, if the market continues to do the same thing over and over, then I'm not going to repeat myself over and over. And I'll get to some questions. If the market's shifting and changing and I feel like there's something to talk about different than the prior Sunday, then I'm going to do less questions and more about how I'm kind of getting in the zone for the week ahead. So anyway, question for the week ahead was for swing setups like FFIE and MREO, liquidity traps. How do you place your initial stop and how do you change it over time? Thanks for the top content. So something like that, I always look for the high volume day. Then it comes back and you look for the wicks, right? So whenever there's a fast wick down, it gets caught, I look at where those bases are. And that's where I start to use my risk levels. And because that's when, you know, maybe they hit a stop or a market sell, but somebody was there absorbing. And you'll see that a lot of times. TBLT, you saw it. Tesla, you saw it. But, you know, pretty much every single day, I always point it out, whether it's in the room or in the lounge. And it's a quick kind of cheat code to kind of see, okay, at what point can I say this might shift the sentiment? At what point might it start to actually fade? And if it's come down 3 or 4 times against this level, at that point, you should assume that it's going to hold that level. And until it breaks down, you know, in my opinion, it's in trend and it can continue to go. So I always want to use that level as sort of my stop, over and under that level. Watch your sizes when you're thinking bigger picture. We all want to get as much size as we can, but a lot of times the secret ends up being less size because you end up taking less size for a much bigger move rather than getting kind of emotional about this small move and, you know, wow, I just made a whole bunch, I'm going to go ahead and move on. You actually let your work, your entry do the work for you. And a lot of times you'll realize that you actually make more, less stress, less risk by letting it work for you than oversizing it and ending up, you know, scalping out. Next up was, thanks Nate, you're the best. Looking for the exchange day and unwind day to take advantage of. Can you give more information to predict this day? So the key is just not to predict it, right? Let it happen. And you saw on RYTM, you saw on TH, you saw on GOSS, you saw on all these different names that they just were slow, steady kind of grinds. You need to either wait for this huge exhaustion move or you need to wait for failed follow-through momentum. And that's really the secret. And if it's kind of slowly grinding and you're short, that can last a lot longer. Sometimes you look back, you're like, whoa. When did this move up 70 cents? And how did this happen? So I always, like, if I anticipate something's going to crack and then it starts to kind of slowly grind back, I don't want to scale into that. That's when you get in trouble. So I wait to see the huge volume exchange either slam down, and that, in this day and age, in this market, doesn't matter if it just slams down. That's not the end anymore. You got to see it come back and stay heavy. And we went over that last week regarding, is it sellers or is it shorts? And that's really the key. Nate, I have a question. When are you interested in trading large caps? I see that you tweet sometimes. You made a trade on SPY or TQQQ, but rarely. I was wondering what is the criteria for the trade and what you look for in them. So it's basically the same thing, just like you see on Mara, just like you see AMC. If you look at those charts, you look at the market, they came in the same wheelhouse, right? That's my setup. That's what I'm looking for. I'm always scanning. Doesn't matter what trade it is. Doesn't matter what stock, anything. I'll trade anything as long as that setup is coming to slowly grinding, speeding up, trap some shorts, blow off, and then I'm interested. Then last but not least, I have a question for the next scan. When you are looking to enter stocks that people have forgotten about, you have to set price alerts. Some of them fade without a bounce. Any entry feels like a chase. Other times they drop to a key level and bounce. So the question is, you know, do these need a little bit more room, and you know, kind of how do you play those? So basically, same kind of thing. Are they shorts hammering it and it comes back up and stays heavy, or is it sellers? Is it shorts hammering it and it comes back up and stays thin and starts to grind, or is it sellers, comes down, it stays heavy and it starts to fade off? And that's the one that I want to fade, when it stays heavy. So that's sort of what I'm looking for. Veru, SIGA, and PTON were all examples on Friday. And I also got another DM the other day too. I call them like the quiet trades. And the ones that nobody care about because they're looking at TBLT and they're looking at AMC. They're looking at all the ones that get your attention. Meanwhile, you forgot that you really wanted to get that trade. RYTM. I'm sure a lot of people missed it on Friday because they kept on trying. Just set the alerts. Wait for it. And like me on SIGA, Veru, and PTON, you join the trade. If it stays heavy, you add in. If not, then you either see what it does and kind of let it hang out. If it starts to grind, you stop out on the starter. If it starts to fade, you scale. And that's how I trade those, the ones that you forget about. And when I set the price alerts right in the room, because it just makes a huge beep like a car is coming through my office, and I don't miss those price alerts most of the time. Sometimes I do. But anyways, that's it. Let's get into scan for the week ahead. All right, guys, so for the second part, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. Michael Berkeley, you've got the free t-shirt this week for the comment last week on scan, so just email me, webmaster@investorsunderground.com. We'll send out a shirt to you. I'm going to go kind of quick because I got to go to the Red Sox game today. It's 98 degrees. I'm going to probably be soaking wet, but it'll still be fun. AMC and Mara are the main watches. Same deal. I always look left, look at prior either levels of support to act as resistance or prior levels of resistance to, again, act as resistance. So it's going to depend. Are we gapping up on the market or are we fading? And, you know, for those two types of situations, Mara and AMC have been really good to me this past week and the week before. And I'm going to stay focused on those. Throw in a Bitcoin chart. Make sure you're watching Bitcoin with Mara if you're going to be trading it. If Bitcoin's breaking out and you're shorting, you know, Mara and the market is fading, right? If your conviction comes from the market fading, so you think Mara should go, but Bitcoin's saying the other thing, you have to be aware of what Bitcoin's doing at all times. RYTM finally cracked. So in this case, you know, look at prior levels of resistance, or in this case, support, which could become resistance. So ideally, gap up, starts to fail to follow through. Same deal with VERU and SIGA. These were great last week. Higher the better type of concepts, failed follow through momentum. In my opinion, we talked about this where I was thinking that we're going to come into a daily chart kind of level, blow off and fade. We talked about this last time, that sometimes these things are just set up too perfectly. Same chart, literally the same chart, too perfect. And, you know, it's the most obvious breakout. And, you know, maybe I should have traded it long into that, but I didn't. But exhaust out finally, and then it starts to come in. And at this point, I think that all pops will start to come back towards the lower end of the channel. And you can kind of see that right over here. And, you know, same thing on SIGA. They literally are the same charts. And this one came in a lot faster, but it could actually come all the way back down to the prior levels of support in the mid-10s or right around there. Other than that, we've got AMTD, which went nuts off of HKD. I guess they own a percentage of it or something like that. So it's sort of a sympathy trade. So if you're looking and thinking about trading HKD, maybe this is a better option. Right? If HKD goes to 120, this thing might, you know, go into circuits itself. So just be aware of that. Have the two up if you're trading them, but I do think that there'll be some type of failed follow through opportunity here. And again, if it holds over the next day or two, then you might have that T+2 move where the buy-ins come. Same deal with something like TKLF. TKLF, I gave the same reminder intraday where, you know, it starts to flatline, just like TBLT. Pay attention. If it stops going down, if it slows, we're in a market where there's so many shorts that come in. If it starts to go sideways, they start to chase it back up towards the end of the day. The cover comes in. A lot of times the trade is the next day. So that kept you out of, you know, this kind of squeezy action. But watch these levels. Watch this VWAP level as a guide. If it stays heavy, should fade all day the next couple days. If on Tuesday, Wednesday, it's not going away, you might have that cover come in on a T+2 type of situation. EVTL, same deal. Higher the better. Failed follow through. I would compare this to FFIE, where, you know, everybody tries to find the top. All you got to do is wait for the top and then watch all pops. And you can see with the wicks on FFIE, each time it popped up, it failed. Popped up, failed. And same deal with EVTL. Let me move this back over. There we go. EVTL, now I'm going to watch any morning shoves and then failed follow through momentum. CLNN, same thing. You know, higher the better. Failed follow through. It has now exhausted out all the prior shorts, so I'm going to be looking for that. I'm very up against the battery exhaustion right now on the camera, so I'm going to speed up. YSG, higher the better. Same deal. It's been a fade for me. I've been fading it since 2. It's very similar to the IMTE and action that we saw on HTGM, BLBX, and all the rest. Continuation side, RDBX. RDBX, it does not mean that I want to get long. I'm just watching for the day that it does bounce because it's probably going to have a 20, 30, 40% type bounce. Snap, and then Snap, gap down, ideally flushes, and then some sort of rally. Then I'd look to fade it back again. FFIE was a great capitulation trade yesterday or Friday. Lower the better, and hopefully we get some sort of rebound there, possibly fill the gap. But if it stays heavy, don't try to, you know, fight that trend. But that's it. I think I made the battery. I made it through the battery anyway. But we will see you in the room tomorrow. Have a great rest of the weekend, and good luck.